Hello traders, welcome back to my channel. In this video, we're going to talk about the bullish flag pattern. The bullish flag pattern itself is essentially just a continuation pattern. It's just sort of representing a pause or a pullback in the market after a stronger move. The best flag pattern strategy by rules. Step number 1, zoom out your charts and mark on the consolidation zone, the flag, of the bullish flag pattern. We recommend all the time to play with the charts. And zoom out so you can better identify the bullish flag pattern. Following this step, it will also make it visually a little bit easier to plan your next move. This step is quite important to be done, otherwise, you won't be able to identify when the next movement will happen. Most trading platforms come with a technical tool that can help you draw a parallel channel and highlight the flag pattern. On the TradingView platform, our preferred trading platform, the channel tool is located on the right-hand side panel. Next, we need to figure out where we need to get into the trade. Which brings us to the next step of the best flag pattern strategy. Step number 2, enter long position at the break of the flag pattern. We have got a really solid looking bullish flag pattern here. That follows exactly the rules highlighted in the bullish flag pattern explained. So, now we can safely enter at the immediate breakout above the flag. Note, you can now safely zoom in so you can better manage your trades, as we already identified the bullish flag pattern. Alternatively, you can wait for a breakout and only enter after a pullback that retests the flag. This is a more conservative approach. However, there is a big risk with this type of chart pattern, that you won't see any pullback once the breakout happens. In our example, we would have missed a great opportunity if we would have waited for a pullback to enter a trade. Most of the time, we're going to get a really big volume burst out the moment the breakout happens, which will make it harder for a pullback to develop. You're right if you think this looks more or less like a breakout strategy. And if you want to learn some tips and tricks on how professional traders use breakout strategies, please watch our insights here, breakout trading strategy used by professional traders. Now that we're in a trade, we need to find our target. Which brings us to the next step of the best flag pattern strategy. Step number 3, take profit once the price travels the same distance in price it did in the flagpole. Now that we're in a trade, we need to establish our profit targets. The way we're going to find our profit target is quite intuitive. First, we measure the distance the price traveled from the starting point of the bullish flag pattern to the flag and project that moved to the upside. TradingView comes with a very handy tool called Measure, which will allow you to quickly measure how big the flagpole was. Alternatively, if you're an MT4 trader, if you don't want to count on hand, you can simply use the Fibonacci indicator and set your target at the 100% Fibonacci ratio. We can see that we have a good profit target of approximately 262 pips. And if we measure the same amount from the breakout point and project it to the upside, we get our profit target. Now that we have a good understanding of where to take profits, there is still one more thing left that we need to take care of. Which brings to the next step of the best flag pattern strategy. Step number 4, place the protective stop loss below the flag. The protective stop loss is generally placed below the lower flag border, or below the bottom of the consolidation zone. A break below the flag will automatically invalidate the bullish flag pattern structure. This is quite obvious because the flag structure won't look any more like a flag. Bullish flag pattern explained. The bullish flag pattern is a powerful technical pattern that can develop from the lowest time frame possible, 1 minute TF, all the way up to the monthly chart. The bullish flag pattern is a universal pattern that can show up in all markets. Note the above was an example of a buy trade. For a sell trade, we need to trade the cousin pattern of a bullish flag pattern, which is the bearish flag pattern. Use the same rules, but in reverse, for a sell trade. It's not a coincidence that the bullish flag pattern resembles a national flag. After all, the bullish flag name was inspired by the similarities with the national flag. The bullish flag pattern is constructed in 2 parts. Number 1, a strong and sustained rally. Number 2, followed by a tight range that slowly drifts lower to form the flag portion of the bullish flag pattern. Another characteristic of this tight range is that it should be contained within 2 parallel lines. If you're still confused, then please have a look at the chart. Not only that the bullish flag pattern is a very simple technical indicator, but it can lead to moves that are of the same magnitude as the flagpole movement. In the next section, you'll learn how to trade bullish flag patterns and how one should trade the best flag pattern strategy. Summary. You should now know how to trade bullish flag pattern like a professional trader. This is a very simple price pattern, if not one of the simple pattern you'll ever encounter, but the bullish flag pattern is one of the most powerful technical patterns out there. We also have training for $1,000,000 Forex strategy. When you're able to tighten your stop loss at the levels the bullish flag pattern allows you to do, you're on the right path. But, not only that, your profit potential is multiple return of your risk. In essence, you risk a little to gain a lot more. Which is the thing that most traders should strive for. Before you sign out, make sure you also watch our 2 keys to success to further enhance your trading experience. Thank you for watching. Please leave a comment below if you have any questions about bullish flag pattern. Also, please give this strategy a 1 like and subscribe if you enjoyed it.